It used to be we're focused on the halvings, but at this point, the entire natural supply of Bitcoin is only 450 Bitcoin available for sale every day. That's sort of about 45, $50 million a day at this level. That is all being consumed by the Bitcoin treasury companies, and the Bitcoin ETFs are coming on strong. My forecast in July of last year in Nashville was Bitcoin's going to appreciate 29% a year on average for the next 21 years. And that moves it from, it was about mid 60s, 65,000 to 13 million a coin in the year 2045. I'm getting more bullish on that forecast, but I'm certainly comfortable forecasting 30% a year ARR on average for the next 20 years.
Bitcoin is entering a new phase, one defined not by speculation, but by structural adoption, regulatory clarity, and accelerating institutional demand. Michael Saylor, executive chairman of strategy and one of Bitcoin's most outspoken advocates, has now revised his long-term price forecast. In a recent interview, he stated that Bitcoin is on track to grow at 30% per year on average for the next 20 years, pushing its projected value toward $13 million per coin by 2045, a target he first shared in mid-2024. But this time, he says he's even more confident. All the fundamental planets have aligned, he explained, signaling a significant shift in both tone and outlook. Saylor's renewed outlook is underpinned by a series of major regulatory and market developments. Bitcoin has now been officially recognized by U.S. authorities as the world's only digital commodity. Banking regulators have authorized financial institutions to hold it. Accountants have approved fair value reporting for corporate holders, allowing companies to reflect real-time Bitcoin gains on their balance sheets. As a result, over 100 publicly traded firms are now holding Bitcoin as part of their treasury strategy, with new names joining the list almost weekly. On the supply side, the post-halving environment has created a severe constraint. Only 450 new BTC enter circulation each day, worth around $50 million at current prices, and that entire daily issuance, according to Saylor, is already being consumed by Bitcoin ETFs and corporate accumulators. Saylor isn't the only one turning more aggressive in his outlook. Bitcoin analyst PlanB, creator of the original stock-to-flow model, is also reaffirming his bullish stance. In his latest video and tweets, he highlights key on-chain signals and market cycles that point toward continued upward momentum. Together, these perspectives mark a growing consensus. The next phase of Bitcoin's monetization has already begun. Before we dive into the clips, make sure to like this video, subscribe, and turn on notifications so you don't miss any of our deep dive crypto updates. And if you agree or disagree with Saylor's revised forecast, let us know in the comments below. Thanks, and enjoy the video.
What's exciting here is we've done 3 IPOs of preferred stocks in the past 6 months. Strike was our first convertible preferred, and that was up 29%, while all the other preferreds were down 6%. Strife was a fixed preferred, paying 10% fixed yield at par. That's up 22% versus all the other preferreds down 4.5%. So Stride was the third of those preferreds. And what's going on here is we are offering fixed US dollar yield, and we're swapping it into BTC yield, which is what our equity investors want. The big breakthrough is that in the preferred market, the capital never comes due. There's no refinance risk. We're basically offering a perpetual US dollar yield forever. We're getting the capital forever. And so by matching a very long duration instrument on the liability side with a long duration asset, we're creating, in essence, an indestructible balance sheet. And these preferreds are a very scalable, extremely low risk way to generate leverage to drive a very large premium into the MSTR stock. So it's a win for the fixed income investors because they're getting a yield 400 basis points more than typical preferred stocks or junk bonds would yield. And it's a big win for our equity investors because they want more Bitcoin, and this is a way to get leverage without worrying about any kind of bond coming due. The last 6 months have been tremendous. All of the fundamental planets have aligned. Bitcoin's been acknowledged as the one digital commodity in the world by the administration. The banking regulators have given a green light to bank Bitcoin. The accountants have upgraded the accounting to fair value accounting. There's been a surge of Bitcoin treasury companies. There's like 100 public companies or more that are holding Bitcoin on their balance sheet, and every single week there's another announcement. I think that, it used to be we're focused on the halvings, but at this point, the entire natural supply of Bitcoin is only 450 Bitcoin available for sale every day. That's sort of about $50 million a day at this level. That is all being consumed by the Bitcoin treasury companies, and the Bitcoin ETFs are coming on strong. So I'm very bullish. My forecast in July of last year in Nashville was Bitcoin's going to appreciate 29% a year on average for the next 21 years. And that moves it from, it was about mid 60, 65,000 to 13 million a coin in the year 2045. I'm getting more bullish on that forecast, but I'm certainly comfortable forecasting 30% a year ARR on average for the next 20 years. I think Bitcoin's up 57% a year for the past 4.5 years. Again, that's double the Mag 7. That's quadruple the S&P. That's 8 times real estate, and bonds are down 4%. So Bitcoin is smashing everything, Joe.
While Saylor's long-term forecast is built on fundamentals, regulatory clarity, institutional demand, and monetary supply constraints, other experts are reinforcing that outlook from a technical and cyclical perspective. PlanB, the pseudonymous analyst known for creating the stock-to-flow model, believes we're not just in a bull market, we're at the very beginning of one. In his latest update, he challenges the idea that bull markets must conform to a 12-month window. Instead, he argues that Bitcoin's current market structure, when viewed through historical data and indicators like the Relative Strength Index, shows strong signals of extended upward momentum. PlanB points out that the market briefly surged after the January 2024 ETF approvals, but has now reset to levels that have historically marked the start of past bull runs. With RSI hovering around 69 and trending upward, he anticipates that Bitcoin could soon enter a phase of extreme strength, potentially delivering multiple months with returns of 40% or more. This technical setup, combined with the macro catalysts described by Saylor, suggests that Bitcoin may not be climbing toward a peak, but rather launching from a new foundation. Let's hear PlanB's full breakdown.
So right now it's a bull market, and also don't be fooled by the length of this bull market. It's not that bull markets are always 1 year. Historically, they are 1 year, maybe a little less, little more, but there's nothing that says a bull market can't last for 2 years. So, in fact, if we're looking at the data underlying the model, we're right now at the very beginning of a bull market. So we made sort of a fake loop in bull market territory after the January 2024 ETF introductions, and we're now right back at where all the bull markets in the past have started. So it's a very bullish signal, if you ask me. If we look at a technical analysis indicator, very well-known one, the Relative Strength Index, the RSI. So the average RSI is 65, and oh yeah, everything above 50, RSI above 50 is an upward trend. So 65 really shows that strong upward trend in Bitcoin. And also the ranges, it ranges between, well, let's say 90, 95 and 40, 45. So right now we're at almost 70, 69, And Bitcoin has been ranging between, lately last year, between 75 and 60. So oscillating around the average of 65. And what I expect, maybe I'm wrong, but a lot of traditional finance guys have entered the market, and if they see an RSI of over 70, which we saw here and here, they get spooked. They think it's overbought, and they sell. So it's very well possible that we stay in a tight range, a tighter range, a more normal range for the RSI in the future, because more traditional finance guys have arrived. But it's also possible, and in fact that's, I think, more likely, that we'll see, after a period of bull market, of overbought, there will be a couple of years oversold, a bear market, overbought, oversold. So we're now entering a bull market. So in fact, this RSI chart is saying we're entering a bull market, and I expect a couple of months with an RSI higher than 80 plus. And that means RSI 80 plus means a return, a market return, a monthly return of 40% and higher. And just as an example of what that means, from the current level, price level 104,000, if we have 4 months of 40% gain, that brings us to $400,000 Bitcoin.
PlanB's recent tweet highlights a compelling correlation that many investors are paying close attention to. Bitcoin's approximately $100,000 price is perfectly in line with the S&P at approximately $6,000. And S&P at $7,000 plus 17% would align with BTC at $300,000. This direct comparison underscores how Bitcoin is increasingly moving in tandem with traditional markets, especially equities, yet with the potential for outsized gains given its unique scarcity and adoption dynamics. Digging deeper into his latest analysis, PlanB points to several on-chain metrics and market indicators reinforcing this bullish case. He explains that Bitcoin's realized price, essentially the average cost basis of all coins currently held, is rising steadily, now around $47,000 overall, with coins moved within the last 2 years averaging $81,000, and those moved in the last 5 months averaging $96,000. Crucially, Bitcoin's current market price of approximately $106,000 sits well above these realized price levels, a hallmark of a healthy bull market with strong momentum. He also highlights the divergence between the arithmetic and geometric moving averages, a technical signal that historically has only occurred during bull markets. This divergence suggests that momentum is firmly in Bitcoin's favor and likely to persist for several months, if not an entire year. While current prices are still below the theoretical stock-to-flow model valuation of around $500,000 per coin, PlanB reminds us that we are only 1 year into a 4-year cycle, leaving ample runway for further appreciation. Despite these bullish signals, PlanB cautions that all models have limitations and that investors should consider their own financial situation and risk tolerance. Nonetheless, his conclusion is clear. Bitcoin remains undervalued relative to its scarcity fundamentals and is currently in the early stages of a bull market, with target price ranges for this cycle between $250,000 and $1 million. Together, these insights from PlanB, paired with Michael Saylor's long-term conviction, paint a compelling picture of Bitcoin's potential trajectory. The alignment between traditional financial markets and Bitcoin, combined with strong on-chain fundamentals and institutional adoption, sets the stage for a powerful bull run in the months and years ahead. If you found this analysis insightful, make sure to hit the like button and subscribe for more deep dives into Bitcoin and crypto markets. Drop a comment below with your thoughts. Are you as bullish as Saylor and PlanB? Let's start a conversation and stay ahead of the curve together. Don't forget to turn on notifications so you never miss an update on the future of digital assets. Thanks for watching.